Good morning. Welcome to Phoenix Trading. So here we are seeing the Nifty daily analysis. So since last few days, Nifty is holding its 15,500 level, as I discussed in the last video, that this candle has to be, any new close has to be above of this red candle, right? And this level, if I mark, it is getting defended like for a few days, and now we got a close yesterday about this, and as I can see, SGX Nifty is opening gap up today, right? As crude oil is reducing drastically, so it will benefit our market. So before that, we can see a few observations again. Last time Nifty opened a big gap down here, right? From 16,680 to directly 16,400, 16,380. So it create a gap here. This gap is there. So after few days, Nifty climbed up to just to fill this gap, and again we saw a big fall after that. So it failed, creating another gap here. I will delete this for a while, my study. So it has created this big gap again. Okay. And first time Nifty tried to enter into this gap, fail again, but at the same time it creates a higher lows, and again it entered into this gap. Okay. So this level is very important now. Okay, Nifty can reverse again from here, or Nifty can close above this level and sustain for few days. So there are two possibilities. It will be very volatile now, right? Another observation is 200-day moving average. It also coming exactly on this level. Okay, so this level is 16,140, and currently SGX Nifty is showing 16,100. So I need a closing above this level, and not only closing, a big bar should be there like this, because all these candles are very narrow range candles, we can say, comparison to this red bar. Okay, this is a very big fall of 4%, I guess. So at least I need a rise of 3% in the Nifty index to confirm the reversal, or we can see again pull back and Nifty can go more down from here. So we will see how this 200-day moving average and this gap will behave. Okay. So the daily traders should be very careful now for a few days, because this, whenever instrument come into the gap zone, it will react very strange. Okay, so you should be very careful with your positions. Another topic I need to discuss, that the sectors. In last video you can see I discussed the Nifty FMCG and Nifty Auto. Only two sector I said that I can have a trade opportunities in that sector. So the trade actually works in that sector. So we will see this now. FMCG. So I drew here a head and shoulder pattern last time, right? And I said that if we get a breakout from here, then we will see a good run, and ITC and Hindustan Unilever will lead the FMCG. I clearly mentioned that. So that pattern get continued for few years because of the market volatility, and now it breakout with a good volume bars, right? With good bit green volumes. So it's really good to see the technicals is working out. Another shoulder is created here, but it's very natural. You can see two left shoulders and two right shoulders also. It's not about only one shoulder. It's all about logic. So bears are not able to push down this index. FMCG is very strong now because it has corrected a lot in past. So it gives a breakout. So as I said, ITC, we'll open the ITC chart. ITC has broke its previous resistance of 280, and it is now moving ahead. So any price during this 2-3 days, if you get around 281, it will be a good buy, because it's a retesting of that level of the resistance, and we could see a new target in ITC of around 309 or 305 rupees. So this will be a new target in ITC, and it gives a really good breakout, right? Only thing I am not sure that I need a good volume also. Volume should be above its average volume. So I will see how this will go in coming days. But the main volume is entered here, right? So already we have done a trade around from 270 to 318, 289. So already one swing is done in ITC. Let's check the HUL. HUL is about to come to our target zone, okay, right? So here I can see a target. So this was a buy zone here. Yes, because why this is a buy zone? It's came around 200-day moving average. It's consolidating, right? So it's a buy zone for me. So it's a strategy for investment. Those who don't have any technical knowledge or don't have any time for trade can apply a simple technique. Whenever a good share like around 200-day moving average, they can accumulate those shares. So from this level, 200-day moving average, HUL has given almost 13-14% in like 6-7 days, which is a good returns for a top share like HUL. Generally, it's a very slow moving share, but it gives us 13% return, right? So let's check out the auto sector also. So Nifty Auto, I have draw this trend line, and I had said that if this trend line gets removed, then we can see a good move in auto. And it happened. It a good breakout. Again, it's retested, and now it's going above its previous resistance. So this is a resistance level. So let's see how it will react on this resistance. If it closes above this resistance, then we can see a good move in all auto stocks, right? Like auto part stocks also, and car companies also, and tires companies also. We can see a good move in all sectors. So this will be a revised target for auto if Nifty Auto able to cross this level and close above it. So before that, we should watch a Nifty level, right? This is a very important level. So let's see how it will work out. And Bank Nifty. Bank Nifty also in a same mode. It's around 200-day moving average. Like past many days, it is taking resistance of the moving average. Here, it tried to cross. Again, it failed. Again, it tried to cross. Again, failed. Now, again, it is retesting. So let's see. This will be a big important level, right? If Bank Nifty fail from here and if it breaks this level, then we can see a very big fall in banks. So I hope that this 200-day moving average will support this time for Bank Nifty and it will cross this level, right? So yes, that's it for the day. I will make a new video this weekend if I get a time on detailed sector analysis. So thank you. Have a nice day.